It's time for that inevitable question that I get all the time. Where is the real estate market heading? Let me consult my crystal ball. Record-setting prices, a never-ending pandemic, rising interest rates, forbearance issues, and a potential market crash. Today, we're going to dive deep into all of these factors. I am Farnaz Tehrani with the Walker team of Intero, back this week to share the much anticipated answer for homeowners and future homebuyers alike. But first, let's start with all of the baited headlines we will see. Just the other day, I saw US home sales plunge. Of course, if you read the article, it goes on to discuss how sales have gone down because inventory is at a record low and there aren't enough homes to buy. Don't stop at the headlines. So while we can't predict the future, what I've come to learn in my experience is that we can't project it.
Now you can open them. We'll gaze into the crystal. What's this I see? A house with a picket fence.
There are 4 big factors while discussing the real estate market. 1, inventory. 2, buyer's demand. 3, interest rates. And number 4, the economy. The past 18 plus months have been full of record-breaking moments. Let's add some perspective though. We live in an inflation economy, which means that prices will always rise. Just look back to each decade for the past 100 years, which means more likely than not, we will always see new records. More headlines fodder. My team lead always tells the story about his father, who was also a realtor. He remembers back when the first home in Cupertino sold for $100,000 and there was complete panic throughout the community. This can't be real. We will never sustain this. And now that home is worth $3 million and it will eventually be worth $6 million. So why is inventory always going to be complicated in Silicon Valley? If you look at historic trends, our population keeps growing at an exponential rate and the majority of people in the nation prefer to live near water. Also, we are the tech center of the world and tech is only growing. Plus, there is a massive and unprecedented surge of millennial buyers. See my previous video on that. Not to mention that land is so very limited in our area, and of course, the weather is pretty darn good.
Sunshine, lollipops, and rainbows, everything that's wonderful is what I feel.
Also, due to the rise in single-family homes, condos and townhomes are finally gaining pandemic timeframe steam in both Santa Clara and San Mateo counties. So this year, we should see some relief in inventory as more sellers are comfortable putting their home on the market. Think previous pandemic factors, Prop 19, and appreciation, which will take a slight edge off the crisis. It doesn't necessarily mean prices will fall or become more affordable. It just means there should be more homes to choose from. Buyer fatigue will be running high. There's another video on that, but it will potentially lead to reduced competition among offers. Of course, we've recently seen 30 to 70 offers on homes, but what I've seen with the buyers that decide to sit on the sideline when the market gets hot, they're still renting and have essentially lost equity that otherwise would have been gained. The key is always to just get in and ride the real estate wave. Time to dive into mortgage rates, the hottest topic right now. In case you didn't know, in 2021, we saw the lowest interest rate ever in our history. So if you're waiting for rates to go down, you're going to be waiting for a long time. Rates will go up. But understand, while higher rates make homes a bit less affordable, they will still be more affordable than they have been historically. Take a look at these interest rates over the past 4 decades. How about that economy? If you follow the economy at all, first know that with all of the multiple hurdles of the pandemic, the government is going to do all it can to keep the economy strong. Additionally, with the stock market rise, many investors pulled that stock money out and placed it in the real estate market. Think inflation. Let's touch on forbearance topic. So many people are waiting for these foreclosures to hit the market because of the pandemic. But like the idea of lowering interest rates, they're probably going to keep waiting. You see, the vast majority of people that opted out for mortgage payments have already rectified their situation, and the remainder of people have gained enough equity that they can sell their home and put money in their pocket rather than foreclosure, unlike the 2008 crisis. This is why foreclosures will not be a big factor, especially in our area. And regarding the crazy appreciation of 2021, if you weren't aware, that was a correction. With the market being paused for 4 months at the peak of 2020, we actually ended up experiencing 2 years of appreciation in 2021, making up for the missed times. Of course, the current rate of appreciation can't and won't be sustained forever. Let's talk about what the national experts have to say. In speculation of another market crash, 100 industry experts say no. They all agree that inventory should improve, thereby slowing price appreciation in most areas. A few weeks ago, the national experts predict an average of 5.2% appreciation across the nation this year. They have since adjusted that to 5.7%. The bottom line is going to be another good year for homeowners. While 2022 shouldn't be as completely crazy as the past 18 months, understand it's still important to stay on top of the latest insights moving forward. Thanks for watching again. I am Farnaz with the Walker team of Intero, here to educate and navigate, not speculate and fabricate. I will see you next week. Don't forget to watch my 2021 prediction and see how they ended up.